Hey guys, this is PC here from Global Alpha Search. Just a quick Monday update for you from my side here. Last 2 weeks were pretty good for our portfolio. Unlike most of the other mostly equity exposed portfolios, we did just fine. First of all, thanks to the very well diversified portfolio that we had, and secondly to the exposure to mostly blue chip growth stocks, which have nicely outperformed. I'm still planning to keep diversifying the portfolio further into the mid-cap space and be adding some of the value stocks. Also, into the weakness last week, I have used the opportunity to use the short volatility long equity trade. So we've added a little bit of this, and this has also added some of the positive returns last week to our global leaders portfolio. As I expected, the volatility was constrained, and the expectations for the bigger correction to come just right now turned out to be wrong. We're basically back at the all-time highs, and the fear and greed factor from CNN, fear and greed index, from CNN keeps improving. We were buying into the short volatility trade at around 17, so quite low. The markets, even though it was still very close to the all-time highs, was very oversold. Things to be watched this week. First of all, the very most important issue is obviously the Fed meeting. I have written about this quite extensively in one of my recent posts called Stay Calm and Watch the Fed. So you can take a look at it on my feed. I think, watching the Fed and seeing what they plan to do with kind of getting the markets acquainted with the potential of higher interest rates and lower balance sheet is basically the very bottom line to be watched by all the investors, and I'm gonna stick to it very closely. So please do watch the Fed meetings very closely as well. Any message about the tapering coming very very soon will most possibly be the moment when we will see indeed increased volatility and a bigger correction, possibly in the range of 10 to 20%. But I personally think this is not the case just yet. I think Mr. Powell will basically keep expanding as himself and his colleagues from the FOMC have basically been doing so far this year. Possibly later into the autumn this year, we could be expecting a more specific message as to what's going to happen with potential tapering. But for now, we've got still pretty supportive growth. We've got Fed having our back, as I said. So staying short volatility, long equity with an average equity allocation with around 70 to 75, 76% in our portfolio is the base case scenario. We're still obviously keeping our long-term holdings, so the long-term treasuries and gold. Let's see just very quickly what's going to be on the macro schedule this week. We already had the IFO business climate in Germany this morning, which turned out to be a little bit below expectations. I see European markets are trading slightly in the red this morning, and so do the US futures. Wednesday is obviously going to be the very most important day this week from the macro front, as we will get the Fed interest rate decision and the FOMC's press conference. So we will be very closely watching for any signs of the change in their message this Wednesday as well. Thursday, we will get the growth rate for the US GDP. Consensus is at around 8.5, 8.6 change. What else? I think basically from the macro front, this is about it. We will also get the manufacturing PMI from China this coming Saturday. It's supposedly going to be lingering at around 50 points. Quite a bit of stuff happening on the micro front as well. As you know, we're running through the reporting season right now, and we will have quite a bit of good numbers coming out from some of the blue chips this week. So we will get Microsoft, we will get Apple, we will get Tesla numbers as soon as today. We will then later in the week on Wednesday, namely, get numbers from, among others, Boeing, McDonald's, Pfizer, Ford, Facebook, also part of our portfolio here, right? So we'll need to be watching that. Then later in the week comes Amazon, Gilead Sciences, Pinterest, ExxonMobil on Friday, Chevron. So yeah, quite a bit of numbers coming out. The reporting season rolls out. So far, the numbers have generally been beating expectations. We'll see how it goes going forward. That's about it, guys. Be watching me on my feed. I strongly insist that you run through my latest posts regarding the expectations as to what's going to be driving the next bigger corrections, namely the Fed and their policy. So stay tuned. I'll keep you regularly updated, and you can obviously start following me and copying me anytime by just clicking one button.